Hey everybody, it's Mark Saunders HOA Management. So I wanted to make this video kind of going over a big issue about insurance at HOA communities. We're seeing this at multiple communities, and it's an issue I'm dealing with right now at one of the communities that we manage in Winston-Salem. So I thought I would make this video going over additional insured, additional interest. Why is my HOA requiring that on my insurance policy? So I'm making this video to send out to the community that we're really talking about this now. So there are a lot of communities, especially condos and townhomes, that the bylaws of the neighborhood, when they were created, states that the homeowner will put the HOA as additional insured or additional interest. There's a little bit difference there, but I wanted to show you exactly real-time scenario, real issue that we're dealing with. So this is a copy of the bylaws for the community that's kind of asking questions about this issue that we're trying to fix for them. So this community was built back, I think it was 1982. So this is their original documents. Let me scroll down the bottom. I don't want to tell you the wrong date here. And September the 24th, 1984. So 1984, the bylaws were written up, and Article 10 in their bylaws talks about insurance. And so what this says is that the homeowners, and keep in mind, when you have bylaws at a community, when a person buys into that neighborhood, they agree to follow these rules. These are the rules of the neighborhood. Think of it like the rules of a basketball game. If you play basketball, you agree to follow the rules. Don't walk, don't travel. When you buy into an HOA, you agree to follow the rules. So this is Article 10, and it talks about the insurance reasons. So every homeowner is to keep insurance on their property of at least 90% replacement value. So if the place burnt down and it cost $100,000 to rebuild it, they are required to have insurance that will pay 90% of that. Number two, and this is the one that causes a lot of question, to name the association as an insured as its interest may appear, so that the association shall be entitled to receive notice of cancellation of such insurance policies. So, and most mortgages, about all mortgages, require this as well. So being named, the association is being named as interest. There's a couple things that goes into that. If they are listed as additional insured, that means that if you own the townhouse in the community, you have a party, somebody's walking up to the party, they step in a hole, break a leg. Chances are that person's going to talk to an attorney. They're going to sue you, the homeowner, and they're going to sue the association because they're going to sue everybody that they possibly can. So by naming the association as additional insured, your policy will actually cover the interest of the association, which you are a member of, if there's a lawsuit or anything that comes up. And also as additional insured and additional interest. Additional interest does not provide that type of coverage, but what additional interest means is that if anything changes on your policy, let's say, for example, you don't pay your insurance premium and your policy stops. Being named as an additional interest, the insurance company will contact the HOA, or in our case, the management company. They'll send it to us and let us know, hey, this property no longer has insurance. Now, you would be in violation of the bylaws because, again, number one says that you will keep insurance in place. So why is all this important? So a big issue that we're seeing more and more communities, and it's not just this one that we're dealing with right now, we're having this discussion with a lot of different neighborhoods, is let's say there's 50 townhomes and they're all connected one way or the other, a shared wall in the middle. Townhouse number 101, the person pays off their mortgage. It's free and clear. Congratulations. That's awesome. Well, there's really no requirements that says they have to have insurance anymore because there's no longer a mortgage. So let's say the person at 101 cancels their insurance policy and now they have no insurance. With the HOA not knowing this, that is a huge liability because now, one, they're breaking the bylaws. The HOA can enforce that. But let's just say worst case scenario, things that keep me awake at night. Now the place burns down. So 101's completely burnt to the ground. There's nothing left there but just a bunch of rubble. There's no insurance. So who's going to rebuild that? And what if you live in unit 102 that has a shared wall there? Your property values just went down and there is no coverage whatsoever to help rebuild the property. This is why it is such a big deal for HOAs, their management company, or whoever to keep track of insurance so that one, we can make sure the rules are being followed, and then two, we're notified if there's no insurance so that the HOA can then take steps. So in this example, the one I was showing you, and keep in mind, these were made from 1984. If you scroll down to the bottom of the exact same page, it states, in the event of non-payment of premium, insurance required is under Article 10, the association is authorized to pay for the premium and put that as a loan against the property, a lien against the property. So in this community, and a lot of communities' bylaws are set up this way for this one reason, is if the homeowner does not show that there's insurance on the property or the insurance has lapsed, the HOA can come in and buy insurance to make sure it's covered, protecting the unit next door and the overall value of the community, and they could put a lien against the property for that premium. So I hope that clears up why your HOA might be requiring you to put them as additional interest or additional insured. Bare minimum, in my experience, is insurance companies, some of them will not allow the HOA to be additional insured, but they will always allow them to be additional interest. At least that way, we're notified if anything's changed or the policy is not paid or not enforced. Or let's just say that the homeowner, this is another video that I'm going to make, the town homeowner might have the wrong policy altogether. We see that so many times that the homeowner that owns the townhouse needs to cover the outside and in of the property, but they only have coverage for the inside. It's a condo policy. So that's the other thing that a lot of the HOA management companies are looking for, is to make sure the homeowner has enough, that the proper type of insurance and that the insurance is active. Hopefully that answers some questions on why you might be getting a lot of letters and responses from your HOA wanting to know about your insurance. They're just trying to protect the value of the community as a whole. If you have any questions, comments, or thoughts, leave them below. Shoot us an email. We're happy to help. Thanks.